Hello and welcome back to Strategic Investor Radio. Again, I'm Charlie Wright, and we're here at the AltsLA conference in Los Angeles, all about alternatives. And we're sitting here with a former guest on Strategic Investor Radio, Michael Klein, Principal and CEO of Freedom Financial Funds, LLC, out of Calabasas, California. They are former bankers, all about credit in the real estate marketplace. Michael, welcome to the conference.
Thank you. It's great to be here again. It's nice to see you.
So tell us, Freedom Financial, you loan money to whom, for what purpose, that is protected how?
Okay, so we are focused on working only with real estate professionals that are adding value to projects in the Western United States. We are a senior lender. That means that we have a first priority lien on any project that we're doing, and that gives us a margin of safety because there's always at least a 35% equity buffer between us and a loss.
And you loan money to these professionals. Are they building from the ground up? Are they rehabbing? Are they doing residences, retail, light manufacturing? What kind of real estate are they doing, and in what geographical areas?
So the quick answer would be yes, and but in all seriousness, we lend on all types of commercial projects. Although commercial project may mean for sale residential, but what it won't mean is anything that a consumer would be involved in. So we're only dealing with real estate professionals. We don't deal with consumers, one. Two, if we're doing housing that's for sale, it's only housing that's for sale to the general population, the middle class, if you will. We're not doing any luxury housing. We don't like that market. We think it's too hard to value, so we don't do that. We're in retail, we're in industrial, we sometimes will do office, we've got a little bit of that. We have apartments, and from time to time we'll look at unique properties such as self-storage or aviation hangars or RV parks. But it's got to be with somebody that knows what they're doing, first and foremost. We always start with the people. Everything we do is people first, and then we can make a determination if their business plan makes any sense.
Okay, so you raise funds from investors, and you use those funds to loan to these professionals to do real estate improvements or changes of some type. We all know that the western coast of certainly California has been beyond red hot for many years, but that the inland is not, and there are many what are called, I guess, tertiary markets that still have opportunity in them. What kinds of opportunities are you open to these days?
Well, so we have projects in the Central Valley of California, as an example.
You do, huh?
Yeah.
You're a brave man.
Well, the projects we have happen to be pre-leased to national companies that want to be there. So we recently got paid off on a couple of Starbucks that got built along Highway 99, we like Starbucks credit, and we were going to be in for 12 months and out. That's what it turned out to be, and so. Real estate's a very localized business, and just because some pundit says don't be there doesn't mean you shouldn't be there. It means that you should be careful, okay? And we'd like to think we're careful. We go and we see everything before we invest, but you should have an open mind, because if you're going to be a Me Too, you can buy in Santa Monica, you can buy an apartment building that is rent controlled, okay, by a very, very serious group of bureaucrats that want to make sure that you make no money, and you're going to get, if you're lucky, a 3% return on your money, okay? Or you can go to some other market and buy an identical building in identical condition, probably in better condition, and get a 6% return on your money without the level of bureaucratic oversight. Each one has its merits. I personally would rather be in the 6% market.
So you see value in various areas. It's a matter of penetrating the evaluation. And figuring out what makes sense in this particular situation.
Yeah, and I think one of the things for your listeners that are in California has a unique perspective that doesn't exist in the rest of the country. When you're in Los Angeles and you say Bakersfield, people think of a very small town. Bakersfield is a town that's bigger than most cities in the entire United States. And so it's not really a small town. In that metro, there's close to 1 million people. Okay, so we think of, Visalia has 120,000 people. Well, if you're on Main Street, which is a cute Main Street in Visalia, with the right project at the right basis, you don't overpay. Well, you could make great money there. Okay, so you have to be careful about overpaying on the coast. Okay, because I can show you how you can lose money really quick in Newport Beach. And I can show you how you can make a lot of money in some places unsexy for Californians as some town in the Central Valley.
Okay, so final question here. Banks. Why would someone come to smaller operations such as yours, which you're obviously going to pay, they're going to pay you more than they would pay to their local or national whatever bank they have? What value added is a firm like yours able to provide?
Sure, that's a great question. So there's a handful of things. We custom tailor our financing to the client's needs, and the client doesn't have to try to morph their business plan to the bank's needs. That's first and foremost. Secondly, we have many creative tools to give them more money while taking the same risk for our investors than the banks can. We move much quicker. We're decisive. And my partners and I have been doing this combined for well over 100 years, so we can add value because we see many more deals than most of our customers do. Most of our customers won't buy a piece of property now without calling us first to find out what we think, what our experience is, and we're so flattered by that. And so it is analogous. I was saying, Charlie, to you before we started the interview, that it's analogous to having the luxury of buying a custom-made suit. It's just going to be nicer than getting one off the rack. Our clients, once they understand that they have to pay a little bit more, and they understand that they're going to get something quicker, with more certainty, with better advice, with better post-closing service, that the price is worth it. And about 90% of our deals are with repeat customers. We add customers, but we're constantly doing deals with customers. And if they thought they were overcharged, they wouldn't come back.
And if you had mentioned earlier geography, so you've got about 60% of your projects in California. You go to Arizona and a little bit elsewhere. Can you talk about that for just a minute?
Sure. So we'll go. So we do a lot of what is called build to suit. And that means that we're providing construction financing or bridge financing to a lease. Our client has a customer that wants a particular building in a particular location, and they'll enter into a lease before anything gets started. We'll lend based on the value of that lease, and we will do that if the credit from the tenant is sufficient pretty much anywhere in the United States. So we have a spattering of projects throughout the United States as a result of that. So it's not in our strategy to necessarily go to North Dakota, but when a publicly traded company with really good credit says we want an X in North Dakota, and our client is fortunate enough to have that tenant as a client themselves, we're going to go.
Michael, thank you very much for joining us today. We hope that you continue to enjoy the conference and that things continue to go well for you and Freedom Financial. Again, we've been talking with Michael Klein, Principal CEO, Freedom Financial Funds, LLC, out of Calabasas. Michael, thank you very much.
Thank you.